These are the 12 largest venture rounds in crypto history. Making top of the list is Circle, who have made the USDC coin, and that's what you call a stable coin. A lot of great partnerships and they've done so well. But I just want to highlight some of the notable mentions. BlockFi done really well. We've got Bakkt, which supported the loyalty program for companies like Starbucks, and there's a real life application for retail business. We've got Coinbase that's obviously done really well. It's a publicly listed company now, and BitThumb, which is a Korean exchange, and Ripple Labs obviously receiving a lot of funding. And these are the top 12 largest venture rounds that we've seen in crypto history. Very exciting for these companies, and of course the new capital is actually moving into developing cryptocurrency technology. Making headlines today is Dogecoin. It's soaring because there's two things that happen. Elon Musk and of course Coinbase Pro making the listing, gaining some 30% since its lows over the last couple of days. Its current value is greater than some of these companies, BioNTech, which produces COVID-19 vaccination, Dollar General, Merit International, which I think is a pretty sad reflection of humanity. And so this is a notorious tweet that we saw right there. Again, this is purely based on a perception of validity, how the market is reacting to Dogecoin being listed on Coinbase Pro. And just a mentioning of Dogecoin from Elon Musk is basically driving this price right here. What you need to note is that a lot of these holders are what you call short-term holders. So the gains that you see in there might not be as long-lived as you might expect it to be. So that's just my word of warning for all of you guys out there. And look, just going back to how big Dogecoin has become. So here's a running list of companies whose market cap is smaller than that of Dogecoins, and it's really a pretty sad list. So some of these companies, Philips, Merit International, Twitter, Kimberly-Clark, eBay, Ferrari, Kellogg's, are all companies that are smaller in market cap than Dogecoin. I think that says something about us and humanity and greed and people just jumping on stuff so blindly. That's why channels like mine exist, so that I can provide education for those of you who are making trades and investments on cryptocurrency, that I'd rather you do it as an informed investor rather than someone who's just gambling, because there are better things that you can do with your money than that. But on a positive note, will NFTs save healthcare? We're looking at the fact that it can. So 2020 saw a rise of NFTs. NFTs are intended to be equivalent of certificate of authenticity, so of course it's going to have an application into the medical world. Everything from works of digital art, music to bits of video was exchanged using NFTs. NFT sales have reached an estimated $3 billion in the first part of 2021 alone, so a very big business. While it's straightforward to see the advantages of NFT in the entertainment industry, art framework can be applied in the real world of healthcare. Your health data, pharmaceutical drugs, elements of the human composition such as blood can be represented by NFTs. So then if this can be explored, then it's going to be huge for NFTs. In fact, blood donation organizations already encourage the use of NFTs for blood donations. Blood donors are marked with a specific token that can then be followed through the system. Donation can then be followed from transport to the hospital into a blood bank and into the eventual recipient, which I think is a very positive application of NFT and a very wide and essential use of NFTs. Blood can then be registered by its NFT into a digital blood bank where the need for particular blood types can be tracked by a blockchain system and delivered to where it is most needed. NFT is not the only sector of the cryptocurrency market where there is a medical application. We already know that VeChain is another fantastic supply chain management solution, but the thing is, it's also being used for medical purposes as well because it tracks a string of records. Last weekend, blockchain firm VeChain announced it built a blockchain medical data management platform in collaboration with Cyprus-based Idente. And so look, we're seeing cryptocurrency, and this is just the latest update from VeChain. We already know that VeChain has made a lot of partnerships and applications for medical use, for tracking logistics and supply chain data authenticity. So all of these are bearing into the medical world where we need to know the source of where our health products come from. On that, we got some huge news on Ripple. They're seeking docs from 15 offshore exchanges. It said it could be fatal to SEC's charges. So these documents, once this discovered, is going to crumble SEC. So Ripple believes records held by offshore exchanges will prove its executive did not violate Section 5 of the Securities Act by offloading XRP into the US public. Ripple CEO Brad Garlinghouse, a co-founder Chris Larsen, has filed a motion requesting the US Securities and Exchange Commission investigating Bitfinex's parent company Efinex and 14 other international crypto exchanges, and these are the 14 other exchanges there. Garlinghouse and Larsen's legal representation countered that XRP sales were conducted on foreign exchanges and thus outside of the SEC's jurisdiction. A very important quote here to read: in case of transaction conducted on such foreign trading platforms, both the offers of XRP and the sale of XRP occurred on the books and records of the respective platforms and therefore geographically outside the United States. SEC's failure failure to allege domestic offers and sales should be fatal to its claims. It is out of their jurisdiction. Seriously, why is SEC even trying to get into this space here? Look, and this filing comes just days after a significant blow to SEC's case against Ripple, not Fipple. Cointelegraph made a typo there, with the court rejecting SEC's bid to access communication between Ripple and its legal counsel, of course protected by attorney-client privilege right there. Furthermore, on XRP news, we are seeing there is strength behind XRP. XRP is remaining popular in institutional investors, especially last week where there was a huge inflow of investments through cryptocurrency. Out of that $74 million that came in last week, we are seeing that there has been quite a significant amount of that being allocated to XRP, significantly more than even Polkadot, which obviously is showing great strength through the institutional investments that we're seeing. So a great sign for XRP is that we're seeing inflows from institutional investments to actually get into XRP. And this happening just in the last week. All right, so we're looking at something very, very interesting. On the back of what's happening with XRP, we are seeing Exodus do something very, very interesting. I'm wondering if they're taking a page out of XRP's book and trying to do something more officially by coming out into a market, by respecting the regulations in itself. Although this trick, I'd say, is a little bit gimmicky in my opinion. I don't think XRP's done the wrong thing. It's just that those kind of teething issues for XRP is going to become part of how the regulations will become adjusted and fitted to the adoption of cryptocurrency in the world. So Bitcoin wallet Exodus to tokenize 75 million in company stock in Algorand. So what does that mean? So Exodus completed an SEC approved Regulation A+ offering earlier this year. So they were issuing shares, right? So these are just outright securities. And then the SOL shares are now being converted into tokens on the Algorand blockchain. I'm not saying it's Algorand, the cryptocurrency, that's not what they're converting to, but they're creating a currency called EXIT Exit on the Algorand blockchain. A bit more on that just in a second. Bitcoin wallet firm Exodus earlier this year sold 75 million in common stock in the company, purchasable only through its wallet. The sale was notable for the company's decision to only receive Bitcoin, Ethereum, and USDC stablecoin for the shares. Exodus touted the SEC approved share as the largest regulated crypto public offering ever. So this is not a currency. This is first a security that's then being offered as a currency. So Exodus says it will transform those SOL shares into tokens on the Algorand blockchain, where they will be claimed by shareholders using the Exodus wallet. The company wants exit holders, so EXIT will be the new currency that they will be holding in exchange for the shares that they have, to be able to sell their stocks in the company using the blockchain infrastructure, which is fantastic. So first, the Regulation A+ sale was approved by the US Securities Exchange Commission. Second, the token holders are also stockholders, offering them a share of the legal ownership of the company. So clearly a security. Think of this as a 2021 version of an ICO, compliant, transparent, and offered by a profitable company with a working product. So very, very exciting to see Exodus offering its shares, getting the SEC approval, and then converting that into a cryptocurrency, which is not going to be behaving as a currency. More so, it's going to be how their stocks are now going to be traded, and very, very bullish and exciting for the EXIT coin that is going to be listed very soon by the looks of it. Again, on the adoption front, digital ruble, crypto in the future of Russia's financial system, says Elvira Nabiullina. So she is the Russia central bank chief. So she sees that digital currencies as the future of Moscow's payment infrastructure. Nabiullina told the Business Network that one of the major challenges creating blockchain-backed ruble will be figuring out ways for global economies to interact amid growing experimentation by sovereign governments around the use of virtual assets as a means of payment. And you know what? Russia is not the only one behind this train of thought. We've got ex-head of China's digital yuan efforts says CBDCs could operate on Ethereum. So central bank digital currencies will one day be more smart and not merely digital versions of cash. So a very promising prospect for Ethereum and just digital currencies as a whole, as we see more and more institutional and governmental demand and usage of cryptocurrencies in this space. Moving forward, and speaking of China, China's Robinhood rivals pile into crypto crazes that look to compete overseas. This is very significant news, guys, because two of China's rivals to stock trading app Robinhood are looking to cryptocurrencies as a way to compete overseas. Futu and Tiger Broker said this month they are applying for licenses in Singapore and US that will allow local customers to trade cryptocurrencies. So what this will see is a massive inflow of very retail investment that's going to come in. And as far as retail investments go, China's ability and China's amount of cash is going to be significantly create a massive adoption into the crypto space. And China, because of its population, is a really, really significant portion of the cryptocurrency world. Even we found recently that 75% of the validators of Bitcoin transaction node was actually in China. So when China banned mining from Bitcoin, the difficulty of Bitcoin mining actually dropped by 16%, which is a significant portion of it in itself. Speaking of exchanges, Coinbase stock rose as crypto platform says US customers can now use debit card in Apple and Google wallets. So I made a coverage on that yesterday. Now that it's becoming more and more open to the general public and more people will come in, whether that's based on speculation or real data, there has been a slight increase on the Coinbase share in the US stock exchange, same as Apple and Google, which obviously has seen the positive impact of this news, although the effects of it is quite minuscule compared to the normal gains and losses that we see in the crypto world. Okay, cool. And speaking of Google, Google is now letting crypto wallets run ads, although ICO ads remain banned on the Google Ads platform. Google's making change in order to better match existing fins and regulations and requirements, a spokesperson said on Wednesday in a statement. So what the hell ever that means, but it's good to see that there's going to be more advertisements that we're going to see on Google based on exchanges, because that's going to mean that more retail demand is going to come into the cryptocurrency world and there may be more adoption and more participation, and we're going to see that scalability. And now, speaking of public money, few if any financial advisor is expected to recommend Bitcoin and Dogecoin to clients. Here is how many now suggest buying crypto. So, I don't think there's that many financial advisors advising people to buy Dogecoin, but cryptocurrency like Bitcoin and Ethereum definitely, and maybe some of the other altcoins that actually have use cases, I think definitely. Some 14% of financial advisors have already added cryptocurrencies to their clients' portfolio or are recommending it to them. So this is just like your financial advisor industry as a whole. Now, it is also worth noting that Bitcoin has been added to one of the assets that the clients of Goldman Sachs can now be investing their assets. Now, Goldman Sachs has control over a very, very large pool of money, about 2.1 trillion, which surpasses market cap of the entire cryptocurrency world. Now, this 14% of financial advisors is a 13 percentage points increase from last year, when less than 1% of advisors were recommending cryptocurrencies. And more than a quarter, 26% of advisors are planning to recommend or add crypto to their clients' portfolios in this coming year, definitely pushing the crypto into that mass adoption phase and that tipping point where it's going to become the new norm that people then hedge their bets against other risky assets like cash, which is pretty risky at the moment because things are quite inflationary, to be hedging themselves with cryptocurrency. And on that public demand, really interesting tweet from Robert Kiyosaki, the author of Rich Dad Poor Dad, saying Bitcoin crashing is great news. When price is 27,000, I may start buying again. So for Robert Kiyosaki, that is his capitulation point. A lot will demand on global macro environment and problems of the incompetence in government, Fed, and the Wall Street. So he's a bit worried about some regulatory mechanism that's going to cause a little bit of a blockage on the flow of money and the investment that will come into the cryptocurrency world. Very sensitive, very poignant tweet to that effect. I suggest we keep an eye on how this guy behaves on investing into cryptocurrency. But overall, the Bitcoin crashing to the smart people is a positive news. In fact, I almost sense that people want the price of Bitcoin to tumble a little bit further before they jump into it. Looking across the market today, there has been an increase on the general market cap. We are seeing Bitcoin test that $38,000 mark. Too early to tell. Ethereum now at $2,800. Very interesting. XRP sitting quite calm at that $1 mark. Pretty good point of entry. Dogecoin making great advances, but overall, I'd say, yeah, the market's looking pretty green at the moment. In terms of Bitcoin, will it crack about $40,000 mark? Maybe not. There is general consensus that it may test lower regions, in which case you just have to average into these positions and use it as a buying opportunity like Robert Kiyosaki is doing. Moving forward, Consensus is a company that I very much respect, headed by Andrew Keys, obviously the guy behind NeFi, which is a cryptocurrency that I've been pushing quite heavily recently as well. Now, Consensus is a fantastic company because it focuses on the scalability of the Ethereum network, and it throws its weight behind Uniswap DeFi lobbying proposal, which was lodged by our good friends in Harvard Law School Blockchain and FinTech Initiative. I've done a coverage on that yesterday, that Uniswap community votes 40 million DeFi lobbying organization proposal, which was done by Harvard Law School BFI. And there has been already a great support behind it, and looks like Consensus coming up and supporting it as a bit of an oomph to their campaign. And this is really good because the DeFi space will probably face some sort of regulatory pushback, and when it does, it needs to make sure that it has some safeguards against that. It has the legal team and the support staff that's going to actually help them formulate that regulatory framework, much like what XRP is going through at the moment. And so I really congratulate the efforts of the group of students that are in Harvard Law School in creating this initiative and now getting the backing from Consensus, and a really big name behind that being Andrew Keys, who, by the way, was also the guy who took to public the Ethereum, the coin that we all know now as being so useful for so many things. Moving forward, speaking of Ethereum, investors cautiously re-enter crypto funds while Ethereum vehicles show strength. So whilst we saw that XRP was one of the popular ones, Ethereum vehicles actually led the market. So about $74 million came into the crypto market in the last week, and we're seeing a good half of that portion has come into the Ethereum vehicle. So the true star of the report is Ethereum. Ethereum vehicles saw a total of 47 million in inflows, making up the majority of net digital asset fund investments and bringing in Ethereum vehicles market dominance up by 27%. The bullish outlook from investors on the asset comes after a string of bullish reports from academic and institutional finance research desks, which I did a coverage on last week, week, both the University of Penn and Goldman Sachs wrote research arguing for Ethereum as a store of value, in part due to its importance to the DeFi ecosystem. So speaking about all the important things in the crypto world, if you hear things like DeFi ecosystem, store of value, and also scalability, those are the buzzwords that you want to be following after and drilling down in your research. Drilling further into Ethereum, the technical analysis on Ethereum is about to begin its run to $9,000. This is a general outlook for it. Guys, don't just look at technical analysis when you're trading. Unless you're doing day trading, then you might need to do that on really short time frames. But my suggestion is that you got to look at technical analysis and fundamental analysis together. Okay, cool. Speaking further on Ethereum, why staking on Ethereum 2.0 is becoming lucrative for exchanges? The staking industry is really growing. ETH Global put on a month-long hackathon focused on Ethereum scalability, known as Scaling Ethereum, which is obviously in high need of, because we're going to see more and more people from the public joining the use of Ethereum. We're also seeing that there's a good chunk of the market that are actually staking Ethereum 2.0, and the number one exchange that does that is Kraken, roughly holding 14% of Ethereum, which is significant. The second largest exchange in control of 10% of the total deposit obviously is Binance. And so we've got some really, really important information here. Staking is becoming an increasingly lucrative service for cryptocurrency exchanges to run because people love it. Even Coinbase, the largest publicly traded crypto exchange, is investing heavily into its staking services. Staking popularity, of course, is a natural outcome of an asset class growing in maturity. And that's because whereas in 3 years ago, holders were mainly interested in securing short-term gains, many are now confident locking up tokens to earn passive income. Why is that the case? Because conviction is growing in the longevity of crypto assets as a respectable new asset class. And what is driving that is the institutional demand. So watch out for the institutional demand, because that's going to really contribute to the longevity of cryptocurrency assets. Okay, so in every case, staking is providing much better returns than simply holding the assets. Stakers earn an additional yield of between 4% and 34% in one quarter. And that's obviously the case. If you look at staking pools like the Zero Pool on PancakeSwap, obviously they are kicking ass and providing some crazy 120% APY on the staking of Cake, which I plan to do when the market dips even further. Last but not least, Cardano is launching its first cross-chain bridge with link to Nervos. This is obviously a fantastic move in terms of making Cardano more scalable. So the forced bridge, as it's known, will allow users to interchangeably transact with Nervos and Cardano's native currencies. And the bridge is expected to reduce transaction costs, reduce the burden for users to possess different wallets to access features from both networks. It will also let developers from both chains to access services and features to expand their decentralized applications and user bases. And so with that, Cardano is looking fantastic. Thank you so much for tuning in today's video. If you haven't done so, please make sure you go like, share, and subscribe. I love talking about cryptocurrency, and I do it on a daily basis, and I make sure they are this informative. Thank you so much for tuning in today, and I'll see you next time. Peace.